Hey everyone! Hope you're having a fantastic week and welcome to another episode of Whiteboard Invest Bitcoin News. To save you some time, let's dive straight into today's top headlines from the world of cryptocurrency. First up, Bitcoin price update. Where are we headed next? Next, pressure mounts on the Fed to cut rates. Local banks facing issues. What does this mean for the market? Moving on, Senator Elizabeth Warren calls on the Fed to cut rates. We'll break down her letter and its implications for crypto. In the UK, interest rates stay high. We'll discuss what this means for the economy and the crypto market. Exciting news from the US. Former President Donald Trump is set to meet with some of America's largest Bitcoin mining companies. What could this mean for the industry? Finally, in Japan, Metaplanet makes headlines again, buying an additional 23.25 Bitcoins. We'll dive into their strategy and what it signals for Bitcoin adoption globally. All right, now let's break down each of these exciting news pieces. Get comfortable, and let's explore the ever-evolving world of crypto together. Hello there, folks. Today, Bitcoin is down slightly $500 to $6,740. One possible reason for this decrease could be the natural assets like Bitcoin. Additionally, negative market news or regulatory concerns can fuel selling and political factors. Borrowing costs and uncertainty. Larger banks are handling the situation differently. Put assets first to avoid bigger losses. Here, troubled loans too. Regional banks already. This is where things get interesting. In traditional financial institutions. Let's talk about the broader impact. US Bancorp increased provision. Highlights the fragility of centralized financial system. It's not just banks. To invest in new opportunities. And there's adding even more strain. In this environment, crypto's appeal as a decent asset class might, and consider how these traditional market stressors can influence crypto markets. Diversification. Let's break down the recent letter looper to the Federal Reserve for a cut in the federal funds interest rate, which is currently at a two-decade high of 5.5%. This is a crypto market. First off, the senators argue that high Americans, driving up housing and auto insurance costs. With major central banks around the world, like the European Central Bank, already cutting their rates, they believe the Fed should follow the crypto world. Costs and more disposable income. This could lead to more investments in riskier assets. Historically, a weaker dollar, which could result from lower interest rates, often pushes investors towards alternative stores of value. Crypto. The Senate rates are worsening the housing shortage. Lower mortgage situation, potentially high auto insurance costs are driven by factors like climate change and interest rates. This misalignment between rate policy and real-world inflation drivers makes less appealing, pushing more people towards crypto. So, for us crypto investors, if the Fed cuts rates, we can market as people look for. It's crucial to stay informed and watch how these economic shifts impact the crypto. Push for lower rates underscores the ongoing tension between economic policy and real-world. For us in the crypto community, with our values of decentralization. What do you think? In the comments below. Let's unpack the recent news about UK mortgage arrears hitting an almost 8-year high in the first quarter of 2024. This development has significant implications, especially for us in the crypto community. First off, the Bank of England reported that mortgage arrears rose to 1.28% of total loan balances, up from 1.23% in the previous quarter. This marks the highest level since late 2016 and highlights the financial strain on households due to high borrowing costs. Now, what does this mean for us in the crypto world? High mortgage rates and rising costs of living are putting significant pressure on household finances. When traditional financial systems are under stress, people often look for alternative investments. Cryptocurrencies, with their decentralized nature and potential for high returns, become an attractive option. Mortgage rates surged between late 2021 and 2023 as the Bank of England raised interest rates to a 16-year high of 5.25% to combat inflation. Although rates have eased slightly, they remain high, adding to the financial burden on households. As fixed-rate mortgage deals expire, more people will face higher costs, potentially driving them towards alternative financial solutions like crypto. This economic strain also has political ramifications. Prime Minister Rishi Sunak's campaign message of an improving economy is being challenged by rising costs, with the Conservative Party trailing Labour by about 20 points in opinion polls. Political instability can often lead to economic uncertainty, which in turn can increase interest in decentralized financial systems. Interestingly, while the current arrears are significant, they do not pose a systemic risk to the housing market, unlike the 3.64% peak during the 2009 financial crisis. However, the trend is worrying and highlights the need for financial solutions that are less dependent on traditional banking systems' volatility. So, what's the takeaway for us crypto investors? Economic pressures and high borrowing costs are making traditional financial avenues less appealing, potentially driving more people towards cryptocurrencies as an alternative. This trend underscores the importance of staying informed and ready to adapt to these shifts in the financial landscape. The rise in UK mortgage arrears is a reminder of the ongoing tension between economic policies and real-world impacts. For us in the crypto community, it's a call to stay vigilant and advocate for decentralized financial platforms that align with our values of financial freedom and security. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. So, let's talk about the recent news about Bitcoin miners meeting with former President Donald Trump at Mar-a-Lago. This event is significant for both the crypto community and the broader financial landscape. First off, Trump expressed his support for Bitcoin and cryptocurrency, highlighting that Bitcoin miners help stabilize the energy supply from the grid. This is a bold stance, especially considering the backlash the crypto mining industry faces over energy consumption and environmental impact. Trump's promise to advocate for Bitcoin miners if he returns to the White House is a strategic move. He's been increasing his focus on digital assets on the campaign trail, aiming to attract new voters. His actions, like seeking advice from Elon Musk and pledging to commute Ross Ulbricht's sentence, show his intent to align closely with the crypto community. This meeting comes at a time when Democrats are pushing for more scrutiny of Bitcoin miners due to their energy consumption and carbon emissions. In contrast, figures like Texas Senator Ted Cruz are staunch supporters of the industry. The political landscape around crypto is heating up, with significant implications for regulation and industry growth. For us in the crypto space, Trump's support could be a game changer. The U.S. has become the epicenter of Bitcoin mining since China's ban in 2021. The industry's future hinges on regulatory developments, and having a high-profile advocate like Trump could influence public perception and policy. The takeaway here is clear. The intersection of politics and crypto is becoming increasingly crucial. As investors, we should stay informed about these developments. Political support can drive adoption and regulatory clarity, which are vital for the growth of the crypto market. Last but not least, Japanese company Metaplanet is making waves by following in the footsteps of MicroStrategy's bold move into Bitcoin. Here's the deal. Metaplanet just announced it purchased a hefty $250 million, $1.8 million worth of Bitcoin, continuing its strategy of accumulating the digital asset as a treasury reserve. This move is significant because it's not just about investing in Bitcoin, it's about hedging against Japan's economic challenges, like its massive national debt and the devaluation of the yen. What's really intriguing is how the market responded. Metaplanet's stock soared by 10% after this latest Bitcoin acquisition, marking its third such purchase in just 7 weeks. This surge in share price reflects growing investor confidence in the company's Bitcoin strategy and validates its pivot towards cryptocurrencies. For Japanese investors, owning shares of Metaplanet is like getting a ticket to Bitcoin's potential gains without the headache of Japan's hefty tax on crypto profits. Plus, trading on the Tokyo Stock Exchange means easy access to Bitcoin exposure without regulatory hurdles. What's clear here is that companies like Metaplanet are recognizing Bitcoin's value beyond just a speculative asset. They're embracing it as a legitimate treasury reserve, much like gold or other traditional assets. And with companies worldwide adopting similar strategies, it's further solidifying Bitcoin's position as a store of value and inflation hedge. So, what's the takeaway? Well, for us crypto investors, it's a reminder of Bitcoin's growing acceptance in mainstream finance. Moves like Metaplanet's show that the tide is turning, and Bitcoin's potential is being recognized by companies and investors alike.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.